how y'all doing? So I got a few things I need to go over today. We're gonna start with Forex. Then after I finish off with this Forex part of the section, or after I finish up with Forex, then we'll talk about ES, and then we'll break that down. So let's start with this GBP NCD. This is my long play today, and I'm actually still in this play. But if it doesn't start moving, so like if we come into New York close, I mean we got quite a bit of time here until New York close. We got a few hours. So, but if it's kind of doing like this type of action into New York close, chopping around like this, I'll just have to cut it. My PT on this is high of day, so I want to see it sweep high of day. All right, we got pretty close right here, as you can see, but it just barely missed it. So, and now we're just kind of, or we pulled back, and now we're just chopping around on this thing at the moment. But yeah, let's break down this play though, and let's get into like what made me buy this. Okay, what triggered me to buy this? So we're going to clear off this chart completely, and we're going to start from scratch, right? So let's zoom out. So on the daily chart, what are we working with here on the daily chart? So this daily chart is bullish, okay? It's operating within a bullish market structure. So you can see we're consistently putting in higher lows, boom, higher low, or consistently putting in higher lows. We're consistently tagging previous highs, consistently grinding up higher, right? The trend is clearly bullish on this daily chart. So right away, boom, I'm trading with a larger time frame trend, okay? I'm trading with a larger time frame tide. But it's also worth noting that we have a larger time frame level of support in here. See that? See that that bullish order block on the daily? That's a bullish order block on the daily chart. That is a larger time frame level right there to the pip, okay? Don't get much cleaner than that. Doesn't get much cleaner than that, right? So let's go to the 4-hour chart. All right, in the 4-hour chart, you have that 4-hour right there, which is an order block as well. All right, and then you have this level right here, but without a doubt, it found its bottom. It found its bottom off that daily level of support, that daily bullish order block. So that was our larger time frame level, and again, we had these other ones in here as well. So so far we have concluded what? We're trading with a larger time frame trend, right? We have a larger time frame level, right? We traded down into or below 50% equilibrium, which is ideal as well. Again, we take the most recent low prior to that large explosive move to the upside. So see this low right here, see this swing low level. We take that low to the high that price reached before it descended lower. This is 50% equilibrium. See that? So we were in a discount market as well. This is a 4-hour chart, which I would consider a larger time frame chart. We are in a larger time frame discount with overall trend still being bullish. So we see how we got several things lining up here. Larger time frame trend, we looking good. We got a larger time frame level being this daily bullish order block, and then we got an order block on this time frame as well. This level of support right here. We have several things, right? And it's inside of an imbalance. So that's what I saw on the larger time frames that I really liked, because as I always tell you guys, your plays become so much higher probability when you have a larger time frame level. And when I say a larger time frame level, for me, that is a 4-hour daily, weekly. All right, I'll glance at the monthly too. I've been starting to glance at the monthly a little bit more as well, because there's levels on the monthly too. But 4-hour daily, weekly, 4-hour daily, weekly, monthly. Let's keep it at that. Larger time frame levels. Okay, and the reactions that you get off of those levels, those are the best plays, without a doubt. Highest probability plays when you have it off of those larger time frame levels. Okay, and when you stick with plays off of those larger time frame levels, it kind of disqualifies a lot of the low probability plays. It disqualifies a lot of that noise. It's the best way I could put it is it's just noise. It disqualifies a lot of that, and it really just brings your attention to the best plays. So that's what we did here on GBP and CD. Let's go to the 1 hour now. So this morning, originally, like I said in chat, I wanted to give it more time. But then right after that news, we had this really nice push up right here. So you can see this was that consistent downtrend on the 1 hour chart coming lower down into our larger time frame level. And then boom, we get a nice move to the upside, which cracks this level right here. That's what we call a shift in market structure. Okay, so we had a shift in market structure off of a larger time frame level of support. That's key. All right, and then we have our fair value gap confirmation right here on the 1 hour as well. See that? See that fair value gap? It's not a very large one, but it's still a fair value gap right there. That's your confirmation with that shift in market structure. Price then traded down into a discount marketplace and allowed you to get an entry. And also, one more thing, notice what level we have in there with it. We have an institutional price level. That is 20. 20 is an institutional price level. It's always best if you have an institutional price level around these key areas as well. Okay, because when you don't have a key institutional price level, many times that's where you'll get caught in fake outs. Okay, because a lot of the major market reversal points are off of key institutional price levels, right? So 0, 0, 20, 50, 80, boom, that's your institutional price levels. So with this example, we have the 20 level right in there with our fair value gap, right after we had a shift in market structure and right off of a larger time frame level, right? So we got that pullback. And we have a bullish order block as well on the 1 hour. Price is fractal. Remember what occurs in a larger time frame. Many times you'll see play out similar scenarios on your smaller time frame. There's your 1 hour order block right there that we tested, had a nice move off of, just barely missed that buy side right there. As you can see, now we're pulling back lower and it looks like it's about to purge these sell stops, which is fine. I still like it. If it was to break below low of day, I would have to take an L on it. But at the moment, I still like to play. I think they could just be running out these sell stops right here before they resume the move up higher. But I could be wrong and I could take an L on it. If I take an L on it, I'm perfectly fine with that. The setup with there, it was a good setup. Larger time frame trend, larger time frame level. Everything, had everything I wanted basically. So again, I want this to sweep high of day. Once it does, I'll take profits into the high of day break. If it cracks below low of day, I'll have to cut it for an L, right? So I think that about covers GBP and CD. Let's go over a few other tickers. And also I'm going to pull up the Discord real quick and I'm going to show you these charts to give a little bit more context. All right, so this is that play I just went over, GBP and CD. So you can see I posted that in chat this morning as well. See, I said GBP and CD traded down into several layers of support, which I just outlined for you a second ago. We had that daily level, and then I have this level of support on the 4 hour, that 4 hour bullish order block, several things in there, right? So we had several levels of support as well as a daily bullish order block. I do think this will have a nice reversal here soon. Keep an eye on the lower time frame. That's what LTF stands for, lower time frame, to see if we can get some buying interest to come into this. And when I say buying interest, what am I referring to when I say that? All I mean is I want to see a really nice, strong, high probability shift in market structure, which I just pointed out to you right here, which was that fair value gap left, really strong move. It broke above high of day as well. High of day, a key level. That's a major liquidity pull. That's a significant liquidity pull. So we got it. I mean, we got what I was looking for. It checks off literally everything that I wanted on the play. It checks it off. It looks good. And again, like, I mean, if you want to hold for high of day, you can do that on a play like this. Me personally, with GBP and CD, especially with it being a low volume pair, I really don't like holding it to New York close because I've been burned many times in the past. I've been burned holding it to New York close. That spread will open up on you, and that's once that spread gets a hold of you, it can mess you up pretty bad. So I've been burned a few times. That's why I'm kind of, with these low volume pairs, I'm a little bit wary about holding through New York close. Sometimes I will, but it'll have to be a ways away from my entry. So like something like this, for example, if we were to come into New York close right here, am I going to hold that? No way. No way. Because that spread opens up on me. I'm not, that ain't good. It ain't a good deal, right? But in regards to the market structure though, this is beautiful risk reward. I mean, think if you're risking this low, and then think if you want to tag these buy stops up here, you're trading with the trend. You got your shift, risking the low. You want to tag these highs, you could do that. You could absolutely do that. And it's like, what? Just by first glance, it's probably like 5-1, 6-1 or something like that. I mean, that's some killer risk reward, out of this world risk reward, right? So that's GBP and CD. We'll see what it ends up doing. All right, so now we're going to go over this GBP USD. This one just played out beautifully, beautiful. So let's see. So we talked about GBP USD yesterday, still bearish at the moment. I said that's a 4 hour chart, and there's your 4 hour bearish order block. I'm talking about this. There's your 4 hour bearish order block on that chart I posted. See, I indicated that I think it's going to pop up into that level and then sell off and tag this daily sell side liquidity. We'd like to see this push up into the area into New York kill zone. New York kill zone is 7 to 11 a.m. Eastern time, or it's New York kill zone is 7 to 10 a.m. Eastern time, but I pushed it personally to 11 because I still get a lot of setups within that time period from 10 to 11. So I'll do 7 to 11 a.m. Eastern time, but that's just me. And likely could catch that rejection in that next leg lower. So again, that's what I'm indicating there. And I said now to the 1 hour, chart, we have fair value gap confirmation. Boom, there's your fair value gap, your imbalance to confirm that we had that displacement lower during London session. But also a few more interesting things inside there. We have a couple levels of resistance. We have that 4-hour bearish OB, which I just noted for you. But above, we have a previous swing level serving as resistance. That's that swing level I'm referring to. Remember our talks on support and resistance. Support when broken becomes resistance going forward. We had an O to low right here, broken inside of an imbalance, making it a very sensitive price point. And many times when this happens, these levels are respected immensely, right? So we have our bearish order block. We have our key level of resistance right here. And lastly, we have our 50 institutional price level, which I was just talking about earlier. Key institutional price levels are what? 0, 0, 20, 50, 80, right? So we have 50 as an institutional price level inside there as well. I mean, look at everything that I just ringed off for you. Look at all those levels of resistance that we just named off. And also consider the fact that this larger time frame trend is bearish, right? You can see I indicated that I think it's going to trade up into this and then sell off pretty hard. We have the influence from London in a direction as well. When I say that, I mean we're trading with the London trend. London, we had a really strong move to the downside, which is really good. I like trading in the direction of London. London basically, think of it like London in many cases, it sets the tone for the day going forward, right? So a lot of times what happens in London, you'll get continuation plays during New York to ride that trend, okay? Not always, okay? But many times that's the case. And those are where my highest probability trades come from, is whenever I have the influence of London session with me as well. Without a doubt, I mean, night and day difference. And for it to be an A+ setup for me, got to have London. All right, so let's see. Let's go back to the chart. So let's start from scratch. Let's go to the daily chart. I think I had an individual in chat ask me a question on this. Let me go see that real quick. All right, so here's the question I got in chat that I said I would cover. Hi everyone, I'm new here. I took a buy today on GBP USD based on thinking it had a bullish daily bias. The markup shows my train of thought. My question is, where did I go wrong in identifying this daily bias? Any help appreciated, thanks. So let's take a look at this fella's chart. So he says it broke this swing high. So what's going through his head when that happens is shift in market structure. And then it came lower and broke these lows, which invalidates that at this point. And then it trades up, puts in a swing high. And then at that point, we're confirmed bearish market structure and also rebalanced at price action. Yeah, so here's where you went wrong. I mean, if you were looking for a buy on that, I mean, you were looking for buys straight up into resistance, into larger time frame resistance. Okay, so here, 1 second. Let's go back to my chart. So we cracked these lows right here. See, when we had the crack of those lows with a fair value gap created, that should have made you hold off right there. Okay, because that's what we would call a high probability shift in market structure, right? Remember, I made a video on this. What constitutes as a high probability shift in market structure? Well, we have the strong candle close below the level, and we also have the fair value gap. So see right here how we had that fair value gap imbalance created. That's very bearish. That shows that there was a lot of institutional sponsorship behind this going to the downside, right? So we had a really strong move to the downside, strong shift in market structure. And what's this? That's a bearish order block. That's a larger time frame level that's going to serve as resistance. It's a bearish order block. So we cracked those lows, shift in market structure, price retraced back up into a premium marketplace, okay? Premium is above 50%. So above 50% of this price range, we traded above 50%. So we rebalanced an entire portion of price action. Structure is bearish now. We're testing a bullish or a bearish order block. We're in a premium marketplace. I mean, you have so many things going against you for a buy at this point. I mean, this is 100% bearish. 100% bearish. There's nothing bullish about this thing. This bounce right here was just to retrace back up into a premium to rebalance this portion of price action. That was it. Okay, there was nothing else towards it other than that. And then we had a swing high formed, which is bearish as well after filling in that imbalance. That's where you went wrong, okay? Now, if it was to, like, for example, so we broke this high right here, right? Now, imagine with me for a second, it was to pull back, right? And then it was to put in a swing low and trade up higher and consistently put in higher lows. At that case, you would be good. But as soon as you had this huge, intense flush right here with that shift in market structure, that should have made you hold off on buys. Okay. I mean, you can counter trend trade, even though it's more of an advanced trader's game, but that counter trend trade should have been down in this area after you took out these lows, after you entered a discount marketplace, and then you had this drawn liquidity. You could have bought this, but you would want to ride it up into that imbalance, and you would want to be very nimble about holding past that. Okay. So you could have scalped it up into that imbalance, but that was about it. That's all I would do with it. So this morning, you can see we had this strong move to the downside. We have a larger time frame level of resistance in here as well. See that? That's our bearish order block that I was talking about earlier that we popped up into and respected, right? And then I'm on a 1 hour chart now. There's your displacement fair value gap in there as well. Let's mark that too. See that? We completely rebalanced that portion of price action during New York. Or let me move this over a little. And then you have another level of resistance. See, that's previous swing level. Let's mark that as well. And you have something else. You have a 50 institutional price level. Remember, 00, 20, 50, 80. Those are your institutional price levels. In this example, we have 50 institutional price levels, several levels of resistance. We had a displacement during London. So we're trading with the London trend, the larger time frame trend as well. We traded up into a premium. Okay, when did that happen? So if we take the high of London to the low, and then we retraced up into New York kill zone starting at 7 o'clock a.m. We traced back up above 50% equilibrium of that price range, and even gave you a key Fibonacci, which is 61%. Or for the fellas that trade OTE, you had OTE as well. I mean, it was just a solid play. And then it came up, rebalanced that price action. Could have kept your stop above that high right there, targeting these lows, or if you want to be a little bit more aggressive, targeting this low, which I believe is next to get tagged here, this daily sell side. And yeah, so that was the setup. Just a really clean setup on it. Alrighty, so now we're gonna end it off with ES for my futures traders. So ES, let's see. This morning we had something interesting here. We had a new daily fair value gap to mess with. All right. So right here we had this daily bearish fair value gap. So just like you can get nice reversal points off of fair value gaps, which actually happened today as well later on, it popped up into it and then slammed harder. So you could have maybe shorted it into that level. But they also, on the other end of the spectrum, they serve as draws on liquidity, right? Because as we know, whenever we have a fair value gap like that formed, that tells us that that portion of price action was not efficiently delivered, right? Think of it like the name, fair value gap. That portion of price action did not have a fair shot. It did not have a fair shot to be efficiently delivered. So when something does not have a fair shot of being efficiently delivered, what do you think it's going to want to do? It's going to want to do so. It's going to want to trade back up into it and efficiently deliver that price action, right? So that gives you opportunity, because that serves as a draw on liquidity, right? And I knew that this morning. And let's just speed down. Let's fast forward to the 15-minute. So we had 8:30 high impact news this morning, which is after that news. After news comes out, after high impact news comes out, that's where you'll get a lot of your opportunities. And if you're a really patient trader, you could really just wait on the news. Wait on days where there's high impact news. Okay, wait for that news to play out. Wait for the stop runs. Wait for those liquidity runs to be done. If you got the patience to do so, I mean, you can make. That's where a lot of these high probability trades will happen. Okay, because it's a lot more clear. It's a lot more clear when you wait for news like that, because these stop runs are more aggressive and they're just more clear, right? So where did that stop run happen this morning? So this is straight from ICT's 2022 mentorship model, because it's like the exact criteria. So we're on a 15-minute chart now, and here is that liquidity run. See these equal lows right here? So we know there's sell stops resting underneath this level. That's a really clean level. See that? Right there. See those really clean equal lows. There are sell stops resting beneath that level that are going to get taken. They're going to want to get taken. And then 8:30 is when that news came out. And what do you think is going to happen? Boom, comes down, purges those sell stops. All right. Again, remember that mentorship model. That's what you want to see first. You want to see sell stops ran, but also consider the fact, don't forget that we have this larger time frame drawn liquidity up here that price is going to want to trade up into, right? So we took those sell stops, and what do we want to look for next? A smaller time frame shift in market structure with our fair value gap confirmation. Okay, and you got the confirmation on the 1 minute chart. You didn't have it on the 5 minute, didn't have it on the 3 minute. You had it on the 1 minute. So this was that drop from news. Boom, it comes down. It purges those sell stops out of the marketplace. Okay, they're taken, they're done, right? We have waited for other market participants to get taken out of the marketplace. All right. Like I've said so many times before, wait for liquidity or you'll be the liquidity. In this case, you waited for the liquidity. You waited for other market participants to get taken. And now you can just step in, take that easy money, right? So it chopped around a little bit, and then boom, you get this really nice explosive leg higher on the 1 minute chart, breaking these highs right here. What is that? That's what we would call a high probability shift in market structure right after the news as well. So we had that shift in market structure, leaving a fair value gap imbalance. What did price do next? Because we still can't enter just yet if we want to be really strict with our rules. We want to enter when price comes back down into a discount marketplace. So how do we measure a discount marketplace? Well, we take the low prior to that expansion higher to the high. We measure that price range and we find 50%, which is right there. As soon as it came down below 50%, you're good. You can get an entry, right? Anything below 50%, you're in a discount at that point. Okay, and then you had that bullish order block. So it was just a really, really nice play. And again, beautiful risk reward on this thing as well. So think if you were to just take it right here, think if you were to risk that low and then look for a drop into that imbalance. I mean, look at how much you're chewing off. That's over 4 to 1. Over 4 to 1. And think if you were to take that consistently. Okay, of course, not every trade's going to be a winner. You'll have plenty of losers, and that kind of comes with high risk reward ratios that a lot of beginners they don't consider. That's part of having a high risk reward ratio. In most cases, is you'll have more losses that comes along with it. But think about it. If you were to have one of these trades right there, that's 4 to 1, 4 trades. You get one winner. It would take 4 losing trades after that to erase those gains. And think if you were to be picky. Think if you were to be picky and you only waited for the best scenarios. Think if you were to be picky and you waited only for after high impact news was to happen. Think if you were to be picky and you only took trades when you had the higher time frame confluence or you had the higher time frame influence. Think if you were to be that picky and wait for setups like that and you were to do it over and over and over again. You were disciplined, okay? You didn't act like a degenerate. You were disciplined, you were patient, and you waited like a professional. What do you think the result's going to be over the large series of trades? And it's on you. I mean, you can do it. It's on you. You can do it, but it's going to take patience. It's going to take discipline. But I mean, these setups, they repeat. All right, price action is price action. It's the same signatures in every market. You just got to be patient enough. You got to study. You got to back test. You got to review your trades consistently, and you do it over and over and over again, day in, day out. It starts to burn into your brain. It starts to burn into your brain, and you got to do it so much because whenever it does play out in real time, like when you see something like this in real time, right after a liquidity run, right after you identified your larger time frame level, it just pops out at you. It just pops out of nowhere. It says, boom, this is my trade. Take me. That's the conviction that you need. That's the conviction. If it doesn't do that, then it's probably not your trade. Okay. So hopefully y'all enjoyed this little review. If you did, leave a like, subscribe to the channel. Want to join my free Discord chat? There's a link to that in the video description as well. I'll catch you later.